Hello. Hello. Welcome to Money Matters TV. My name is James Chan. I'm your host for this episode. And I have my co-host with me, a longtime friend, commercial banker, Paul Mitchell. And Paul is going to have something very interesting to say. And we'll have a short conversation, maybe 6 minutes. And after that, we have a wonderful, wonderful guest. And I'm going to introduce our guest to you, and I'll let you know what the topic is. But now, Paul.
James, good to see you again.
Good to see you. All right, what's your mysterious topic? something we don't talk about very often.
No, well, it's very consumer oriented, though it's business. It's B2C, as they say, business to consumer.
Okay.
So, shopping. Everybody shops, and specifically grocery shopping, because grocery shopping seems to be changing a lot. Gradually, there's some significant things happening, things that did not really exist, I would say, 10 years ago. That is where you can call up on the phone or go on the internet and place your grocery order,
Right.
and then 2 hours or a day later show up at the grocery store parking lot and have somebody put the bags in your car.
Right.
Or the next level, which is also offered, is you can actually have those groceries delivered
Right.
to your home.
Have you done that yourself?
I have not.
You have not. I have seen my neighbors
Yes,
do it.
yes.
I have not done it, and I know that particularly this I don't know what name to call it. Internet grocery shopping or deliver to your door shopping probably will be good for people who are retirees. You know, they don't want to go to the grocery stores. They don't want to really, go from point A to point B to point C because it can be stressful. So, if you have not done it, what makes you think that it's a very interesting topic?
Well, I've actually worked in a grocery store.
Oh, you did?
On a part-time basis.
Really?
Doing the shopping. That is, I get a little machine. Okay, I'm given a little machine. And I get a grocery cart.
Right.
And I go around the store, and the machine tells me that by aisle, it's in order. Okay, so I start off with aisle 1, for example, aisle 2, 3, 4, 5, 6, 7, through aisle 16,
Right.
picking out the items that are on the list for your order. And then I bring the groceries back to the room, the distribution room, we'll say, where the groceries are bagged, put in traditional shopping bags.
Were you doing it for the fun of it, or because it's an innovation, or it's something new?
Something to do, interesting.
Okay,
Sure.
I see. So I hope you're not, or maybe you are trying to get into another, to create a new app to improve the.
Well, there are lots of apps that do this. That's part of the evolution of the industry.
Right.
Now, let me just back up a little bit.
Right.
I mean, you think about, home shopping. Home shopping is when you order on the internet or over the phone and you get it delivered, by mail or whatever.
Okay.
So really, you can't just call it home shopping.
So
Because it's actually, you're going to the place to pick it up. The shopping is done for you. It's grocery shopping. You don't do it for your clothes like ordering from Amazon.
But I thought that they actually deliver the stuff to your door, like right at your door. They might even ring your bell and then they run away.
That's one of the services over. That's the more expensive service.
Oh, really?
So here we go. So nothing's for free, really.
How much
though
does one pay?
Though it might be for free.
How much does one pay and how to pay?
Well, there are variations of the theme. Some are transparent, some are not transparent.
Oh, really?
For transparent is when a grocery store says it's going to cost you $5 for us to shop your order.
Okay.
You go to the store, and you'll see the sign, pick up here, okay? You go there, and we in the store see you on the screen, okay? Somebody's there, somebody goes out and says, yes, Mr. Mitchell, you ready to pay for your order and pick it up? Yes, I am. Okay. So then go back to the store. The groceries are brought out and put in the car. Okay. And you pay by credit card or whatever. All right. Now that may cost $5. Okay. Whether you purchase $2 worth, a tube of toothpaste, or $300.
What if people get
that.
the wrong stuff? Can they return it?
Absolutely.
Okay.
Absolutely. Anybody that's in the business has to be extremely customer oriented.
Right.
Because if they turn you off, they're going to lose a customer, not just lose an order.
sounds like another variation of the Uber or something like. In other words,
It's another service, service, or
That's
using
social media.
social media. Exactly.
know,
Okay.
yeah.
Now, if you have it delivered, this $5 order, if you have it delivered to your home,
Right.
it's probably going to cost you another
I
$7,
think so.
whether
I
it's
think
$2 or a $300 order. That's one model. One
Right.
model.
Well, being a naturally skeptical person,
Yes.
I'm going to ask you this question. Don't you think that people are missing out on, seeing people kind of maybe touching the stuff or maybe smelling the fruits?
Absolutely. If you'd like to
and
spend an
just-
hour and a half walking around a grocery store and spending 20 minutes in a line behind other
Well,
people
not
that
a
have
line.
300 items on the conveyor belt.
Okay, so there may be,
Oh,
there
yeah.
may be downside or upside. I don't know.
You have to really trust, of course,
Okay.
where you're
All
shopping.
right.
You want you know them well. Now, I'll give you the other aspect of what I call transparency.
Yeah.
Some stores or some places, okay, will say it's free.
Okay.
Terrific, okay. But then you might ask, well, am I paying the same price for that tube of toothpaste if I walked in the store and took it to the cashier as I have it delivered or packed up and so I pick it up in my car? The answer usually is maybe.
Okay.
Guess what? I would say the answer really is probably not.
Yeah. Paul, we are running out of our
Okay.
short conversation, and it's much better that for me to ask you, being
Sure.
the commercial banker, a question that is hardcore to what you have been doing for decades.
Okay.
All right. So there is a viewer by the name of Norman Frick, and he wants to ask you this question, which is, what directions do REIT prices go when interest rates drop? Now, being a commercial banker, this goes into your bailiwick.
Sure,
So,
sure.
Shoot.
Interest rates. Okay, well, first of all, what's an REIT? It's a real estate investment trust. So it's an entity that owns lots of real estate, typically commercial real estate. And typically that commercial real estate, there are tenants in it that pay rent. They pay rent to the entity that owns the real estate, okay? And then that entity, probably has a lot of debt loans on that real estate, okay? Like most people, when they have real estate, they have loans on it, all right? Loans have, charge interest as well as principal. So here we go in terms of
Interest
if
rates
interest
dropping,
goes up,
interest rates dropping.
or if they go up, what happens with the value of that real estate investment trust, okay? And the bottom line answer really it's very complicated. It depends. First of all, you're talking about the real estate investment industry as a generality. If you talked about the gasoline industry, the energy industry as a generality, everybody in the energy company is going to go up or down at a certain point in time.
Okay.
Depends.
Okay.
How well they're managed and that
That's
type of
fair.
thing. Okay.
That's fair.
But here's just some other aspects about the interest rate fluctuation. Okay. One would think if interest rates go down, okay, that means the loan interest is less, so the person that owns it, okay, is going to make more money because they're paying less expense and interest. Okay. Well, what if the interest rate is for a 10-year or a 15-year loan, just like your home mortgages for 25 years?
Right, yeah.
Do you really care whether the interest rates go up or down over that 20-year period?
Well,
Not directly. It's going to impact the value of your property, perhaps, but not your
so the answer is
investment.
it depends, which is
It
a
depends.
fair.
And another aspect
response.
of it is you would generally would think that if interest rates go down, the value of that real estate would go up. But like I said, it may not actually happen because it's a fixed rate.
Thank you. Now, here is how you send in your questions to Money Matters TV.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, MONEY, -matters, MATTERS, TV.com.
Welcome back to Money Matters TV. For this episode, I have a wonderful guest. I've known him for a long time, and so he is has been working in this industry for decades, certainly beyond being an expert. His name is Michael Puppo. He's president of Devon Financial Group. Hi. Mike, should I call you Mike or Michael?
That'd be fine. Mike
okay.
is fine. Yeah.
So it's been a long time.
Very much so.
We're very happy to have you here.
It's a wonderful opportunity to come back and explain interesting but simple topics.
Right. Especially now the focus of this the interview, this conversation is about retirement, which
That's
is
right.
kind of dovetail to what we were talking
Absolutely.
about. You know, the grocery and wanting or not wanting to move around. So now I think my first question to you is, if I am about to retire, what should I do? What things, what ideas, what information, facts should I put together in order, if I'm going to see somebody like you or anybody who is in financial planning, so that I can give people kind of like a detailed list of what my needs and expectations are.
This is an extremely important topic, not only for those who are about ready to retire, but for anybody at any age.
I see.
And the reason for that is planning for retirement today and all the roadblocks that come into your life before you retire have got to be looked at and analyzed as how that's going to distract not only your mind, but your income from, in fact, continuing to go along to the ultimate goal, which is retirement. Certain things like, how am I going to pay for my kids to go to college?
Right.
Other aspects of that would be, can I push enough money down along with the idea that my wife or my spouse and I will be getting Social Security, and that would be a couple of layers of guaranteed income, but can I push enough money down so that I can live as comfortably as I live today?
So these are some of the points that you want people to
and
make
that
a list
starts,
of.
that's right, and that starts today. So the most important thing and the simplest thing to do is to set aside enough time, hours, and that's all it takes to plan for the retirement.
I'm smiling slyly because, you just have to forgive my being sometimes naughty. What about how long do I get to live? Is that something that I have to put on this list?
For me, no, because I'm going to live a long time. I've got 3 grandkids, and that's it.
Yeah.
And I told them I'm going to watch them get married.
Right.
But the most important thing a person can do is to set enough time aside so that I can do a disciplined plan personally.
Okay.
And the easiest way to do that is to get a simple financial planning guide that you can get from a financial planner or go online, and keep it simple. There are books that you would fill in, 50 pages or whatever. There are books that you would fill in, and then what do? You say, I don't know what I have in here. But we set aside, ask everyone to fill out simple planning guides.
I see.
That gives you the basics of where you are right now.
So how many pages is that?
Yeah, right.
4.
4 pages.
Well,
Okay.
that's not so bad.
No.
So
because
how
you know
long
what?
how long should somebody
exactly.
take to set that
They
time
should
aside
be
to do
thorough, but as thorough as they can be, so that, and they must have, in my opinion, a third party to help them to make sure they answer the questions that are important enough to get them organized and on their way for retirement. And then the continued discipline of pushing that money down to make sure it's there.
But I don't think it's just getting themselves organized, but also help to enable the financial planner to give advice.
Correct.
Am I correct?
Yeah.
It's not just organizing.
Yeah, and you know why? Because we have found that do-it-yourselfer financial planners,
Right.
when they get done a financial planning guide, what do? Well, I'll work on that tomorrow. Maybe I'll do it. But if like just recently, I had a client call me and he wanted to set up his financial planning guide. And I said, fine, don't kill yourself on it. I'm going to ask you the questions because I have this guide.
Okay.
So we're going to help you organize yourself, but it has to be a discipline that you and your spouse follow.
Once that is done, what really are the immediate concerns?
Really, really good question. First of all, depending on age, the immediate concerns is how am I going to get through the minefields that are looking for my future before I can retire successfully. And the fact is that there's plenty of ways that you can build, and I call them layers, plenty of ways that you can build layers to make sure you get to that road where once you retire, you can go out and say, okay, fine, I know I have this layer coming in. For example, my wife has Social Security.
Right.
Two important layers, because that's not going to go away. Then I'm fortunate enough to serve a lot of years in the military, so therefore I have a military pension coming. That's another layer. Really important. Oh, I might have a pension from
That's
work.
right, the company.
And by the way, my wife has a pension from work. That's three more layers. The nice thing is that you can do these layers yourself, either independently or working for a corporation that might have a pension plan, a 401k or 403b plan, so that you know when you need to turn on those spigots, you can control the spigot. For example, I have two pensions coming in, Social Security and my military pension. I don't control that. I look forward to it. You know, other people say, "Oh, geez, I can play in the market. I can play these games," but I want guarantees when I retire.
I see.
Now, I'm older than retirement age, but I'm still doing it because I love my clients. But the fact of the matter is that I could have retired years ago. Why? Because those pensions and those profit-sharing events were always there for me to turn on the spigot.
Although pensions are getting fewer and fewer, right?
Oh,
Oh,
absolutely.
absolutely.
Yeah,
I'm fortunate.
Yeah,
Yeah, but that's
unfortunately.
why a company who offers a 401k plan wants participation on their own, and people say, well, you know, I got to save for my kids to go to college. I'm not going to contribute to my 401k plan. That is, as the man said, pity the fool that doesn't do that.
A very general question, and then
Yes, sir.
after that, I'll ask you a very important question.
Absolutely.
The immediate one is, well, you know, how many kind of ballpark it, roughly how many people in America really save enough for retirement? Well,
So-
I know it's very difficult to ask.
I know.
but-
So your question really is how many people are disciplined enough?
Yeah, right.
Because everybody in
Yeah,
America
yeah.
is kind of saving for retirement. You know, you say to yourself, in my opinion, people have their own little financial
yeah,
plan
yeah,
in their brain.
right.
So they're not, those who care are not going to go crazy looking for those investments that are going to make that money, you know, outlandish amounts of money to make sure they're comfortable. They have a disciplined way to do it. It's in the brain. You've got to pull that out of your brain, talk to an independent advisor, someone, a third party
okay.
who has been there, and say, am I doing this the right way? Important. You must protect yourself with the proper disciplines of insurance.
Sure.
Why? Because when the rubber hits the road, or someone needs long-term care, that's right, life insurance.
Which is what I'm about to ask you about long-term
Sure,
care. Is it
sure.
important, and how do people deal with it?
Long-term care is extremely important, and when the need first came about, and you know, in today's world, it was about 20 years ago. We only had a couple of ways to help to set aside money for long-term care. For example, there were individual long-term care policies. Okay, so what that means is you're spending money so that when and if you need either long-term care or nursing home or home health care or assisted living facility, you have that money based on the insurance payments to you.
I know.
Now, the problem with that is, first of all, it's all there for an insurance-based payments. It's all there, but the problem is that if you don't use it, you lose it. When I say that, when you pass away or when you don't need it, the fact is the money's
I'm
gone.
going to ask a very dumb question. It shows my ignorance. Does Medicare cover any of the?
It does for a particular period of time, a very short
What do
period of
you
time.
mean?
After that, you are on your own. Okay.
So it does.
It does for a
cover
short period of
some.
time.
When you
Yeah.
say short,
A few months.
that's
it,
Few
you know.
months is
So-
not much.
So what happens to old people?
Yeah, right.
Well,
exactly.
there's Medicare and there's Medicaid.
Okay.
You know, and you know, so consequently, Medicaid is when you lose control of where you want to live. That's why there are alternative plans to use it or lose it, and one of them is they have products now, which we do a lot of for our clients, to tie a long-term care policy in with an annuity, so that if you don't use the long-term care, you still have the annuity. If you use the long-term care, then it eats away at the annuity program, the payments that you can get out of that. The other part of that is that if you're insurable, to tie it in with a life insurance policy. Now, the nice thing about that is the benefit is tax-free. If you don't use it, the life insurance is tax-free to pass to your beneficiaries. So those
How
are
do you use
products
a
that we
life
do.
insurance policy if you don't die?
No. When you pass away, obviously that goes to the beneficiary.
I see.
But if you needed long-term care coverage, the long-term care coverage replaces the life insurance benefit. So consequently, what happens is either you use the life insurance side because you didn't need long-term care, or you use the long-term care side, and that reduces the insurance benefit. But at least you're going to get something out of it versus the individual long-term care policies. So there are ways, but it takes money to do that. But you have to prepare for it. It's a lot less money than if you have your whole savings and your home, all that decimated because you had to put all that money into the average cost per month of a home health care plan. If you go into a long-term care facility, that breaks you within months or years, and you don't want that to happen.
What did people do 50 years ago, 80 years ago?
Prices were a lot lower then.
Long-term.
Yeah, they had
Care,
insurance policies, but they were ancient type insurance policies for that. Today's phenomenon, and that's what we're talking about today, is you have the three alternatives. You either have a long-term care policy that goes away if you don't use it, the money's gone. The life insurance coupled with long-term care, or the annuity coupled with long-term care. That's about it.
It really does sound complicated.
But there's a better solution.
Yeah.
In the old days,
Yeah.
you didn't live that long. Didn't have to worry about it.
Right,
You
you're
drop
right,
dead
you're
and you're
right.
69 years old. So,
And
it's
also
easy.
in the older days, people lived in bigger families,
True.
and
True.
whereas right now a lot of people probably live by themselves.
Well, the key is if you need to go into a nursing home, that's the cost right
Yeah,
there, huge cost.
Yeah.
And it's hard to overcome those costs if you haven't put money away for
Yeah.
that.
I just saw my 98-year-old mother in Hong Kong.
God bless her, that's great.
And I was told that she may have to check into a nursing home very soon. So,
Is she living on her own right now?
it's a long story.
Oh.
But
Now, so if you don't have the assets and you spend down your assets in a nursing home, then you're eligible for Medicaid.
I see.
But it has to be at a certain level. And you do have an opportunity if somebody's living in the house to keep the house, to keep a car, and have a certain amount of money available for you, the other party, to live while you're but you do lose control of what they do for you.
I can see why some people want to avoid thinking about these issues because these are not very happy issues.
That's why you have to plan to push the assets down and overcome the cost of educating your child, in college, et cetera. Other costs, your own health insurance, your own home insurance, auto insurance. You have to protect those assets. That's proper financial planning. Taking advantage of the special things, the IRA plans that are out there, the SEP IRAs, the 401k plans. You've got to participate in those because you will not have enough money to live after that.
In your profession, let's get to the basics. How do people pay you? Do you charge by the hour? Do you charge by, people have to pay you. You're not doing this for free.
Basically, it's up to the individual financial planner.
Okay.
In a lot of cases, what will happen is that you will pay per meeting, et cetera, and then you don't pay as much to buy the product.
I see.
So that would be a fee-based financial planner.
Right.
Others say, I want to be a commission-based financial planner because I don't think it's necessary for me to charge you per phone call like an attorney does or for you to come in.
Right.
I just never thought personally that was fair to my client because I really do rather have them have it in their pocket. For us, we work on basically what we can get from the product itself. For example, for every insurance policy that you buy, whether it be auto, home, long-term disc, long-term care, the representatives gets a certain amount of money from it.
But some people do give advice on a fee only basis.
Sure.
Okay.
The majority do, I would say.
What are some of the safe places to put your money these
Basically,
days?
for safety purposes, you do not want to lose your principal. So in essence, people use items like, if you're talking about outside of the insurance type plans that are there.
Investment type things, yeah.
Exactly. In the investment area, we have the annuity area, which is insurance based, so that you have guaranteed death benefits built in, you have guaranteed living benefits built in, all at the cost. But the fact is that's the most worthwhile cost you can spend because you know that that product is going to be there either for you or your beneficiaries. Okay. So,
My question is, I guess it's a common question. So let's say I lost 40% of my money in the stock market 12,
Hope
13
not.
years ago.
That's
Okay?
scary.
But let's say I said, okay, well, you invest for the long term. I kept my money in the stock market and I recouped whatever it is, 150% since then. If I
Correct.
put in an annuity, where would I be? 30% back or what?
Well, you buy an annuity
good
for a
question.
different purpose. You buy an annuity to perform if the market performs. You buy an annuity also not to lose if the market doesn't perform. They have items like a fixed or equity indexed annuity, which in fact goes up if the market goes up, and it could be limited by caps because you are fully protected on the downside. So that's an important consideration.
Why would
And
everybody
also it's
do that?
tax deferred, and also it's an easy transfer to your beneficiaries upon your passing, because all you have to do is get bring a copy of your death certificate and fill out a death claim package, and the money goes immediately to the beneficiary free of probate. So they are extremely good products. People say, well, look at the internal cost of an annuity. And the fact is that look at the internal cost of you losing your 40% in the marketplace and wondering if that'll ever come back. So there are protections built into life insurance or insurance company products that you cannot get in the normal stock or bond market. People say, well, I'll just ladder my maturities of bonds. That means as they mature at different times, and they'll mature.
This is a great conversation, but we are running out of time.
Oh, I'm sorry.
I am
Yeah.
giving you an opportunity in 1 minute to say something you want to say to the viewer about retirement, about preparing for their retirement. What would you do in 1 minute?
Personally, thank you. It's very important that a person take the time and absolute time to start to plan.
Okay.
I think it's also important to get a third party, whether it be a financial planner, your broker, your insurance agent, to help you to sit there as a third party saying, let's look at this side of your retirement, but definitely plan on your retirement. Don't let it happen automatically, because it will not. You will lose more money wasting your time trying to figure it out yourself
In other
than
words,
have somebody listen to
One
to
can
listen
wait
to you.
too long.
That's correct. Tomorrow, about 4 o'clock in the afternoon.
Right.
Yeah.
Can't wait too long.
Get your will squared away.
Right.
Make sure it's up to date. So many people have an old will.
Okay.
If you need a living trust, get a living trust, but protect your family and yourself by organized participation in what you need to do to get retired properly.
Thank you, Mike.
Thank you.
It's very nice to have you here.
Certainly nice to be here.
So this is going to conclude this episode of Money Matters TV. Our next guest is Candida Cisak. She is founder and chair of Executive Leaders for Advisory Boards. And one more time, I hope that you will submit your questions to Money Matters TV. We will have people like Mike, like Paul, to answer whatever queries you may have. I hope to see you soon.